Trade wars are like a disease. They can spread quickly and cause significant damage to the global economy. When countries impose tariffs on each other's goods, it can lead to higher prices for consumers, job losses, and slower economic growth. These disputes often arise from disagreements over trade imbalances or accusations of unfair trade practices. Understanding trade wars is crucial in today's interconnected world. They can have a ripple effect across the globe, impacting businesses, consumers, and the overall health of the global economy. As tensions rise between major economies, it's essential to examine the potential consequences of a full-blown trade war. The current situation is reminiscent of past trade conflicts, such as the Smoot-Hawley Tariff Act of 1930, which exacerbated the Great Depression. While the world has learned from past mistakes, the threat of protectionism still looms large, and its potential impact should not be underestimated. On January 22, 2025, President Trump sent shockwaves through the global trade system. He announced a potential 10% tariff on a wide range of Chinese imports. This action was set to take effect on February 1, 2025. Trump cited the ongoing fentanyl crisis as justification. He blamed the flow of fentanyl into the US on China, with Mexico and Canada serving as transit points. Trump's tariff threats didn't stop with China. He also warned of potential tariffs on goods from Mexico and Canada. He acknowledged that these tariffs could lead to economic pain for American consumers. However, he argued that such measures were necessary to protect American jobs and combat the drug trade. This aggressive stance towards key trading partners marked a significant escalation in trade tensions. It raised concerns about a potential trade war that could have far-reaching consequences for the global economy. China wasted no time in responding to Trump's tariff threats. The Chinese government issued a sharp rebuke, vowing to defend its interests. They emphasized that there are no winners in a trade war. Chinese officials hinted at potential retaliatory measures if the United States followed through with the tariffs. Financial markets reacted swiftly and negatively to the escalating trade tensions. China's CSI 300 index, a key benchmark of the Chinese stock market, experienced a 0.9% drop. The Hang Seng China Enterprises Index, which tracks Chinese companies listed in Hong Kong, tumbled by 2%. These declines reflected investor anxiety over the potential economic fallout from a trade war between the world's two largest economies. The European Union, another major player in global trade, also expressed its displeasure with Trump's actions. On February 7, 2025, the EU retaliated by imposing tariffs on a range of US goods. These tariffs targeted American agricultural products, technology, and consumer goods, including soybeans, corn, and electronics. This move marked a significant escalation in trade tensions between the US and its European allies. The future of global trade hangs in the balance. The recent exchange of tariff threats between major economies has raised concerns about a potential trade war. The consequences of such a conflict could be severe, leading to higher prices for consumers, job losses, and slower economic growth. Experts are divided on the potential effectiveness of trade wars. Some argue that they can be a useful tool for protecting domestic industries and jobs. However, others caution that they often backfire, leading to higher prices for consumers and retaliation from trading partners. The current situation highlights the importance of dialogue and cooperation in resolving trade disputes. Unilateral actions, such as those taken by President Trump, risk undermining the rules-based trading system that has underpinned global prosperity for decades. As the world watches anxiously, the coming months will be crucial in determining whether these trade tensions can be resolved peacefully or whether they will escalate into a full-blown trade war with devastating consequences for the global economy.